An asset is anything of value that can be bought and sold, like a stock, currency, or commodity. The market is simply a place where people buy and sell these assets. An order is the instruction you give to either buy or sell an asset. A position is a trade that you've already opened, whether you've bought or sold. When you go long, you're buying an asset because you expect its price to go up. When you go short, you're selling an asset because you expect its price to drop. The entry is the exact price point where you start your trade. The exit is the exact price point where you close your trade. A stop loss, or SL, is a price you set to automatically close a trade and limit your loss. A take profit, or TP, is a price you set to automatically close a trade and secure your profit. Pips are the smallest possible change in a currency pair's price in Forex. A lot is a standardized amount of currency you trade in Forex, like 100,000 units. Leverage is money you borrow from a broker to increase the size of your trades. Margin is the amount of your own money you have to put up to open or keep a trade. The spread is the difference between the buying price and the selling price of an asset. Liquidity refers to how easily you can buy or sell an asset without its price changing much. Slippage is the difference between the price you expected to get and the price you actually got when your order was filled. Volatility is how much an asset's price goes up and down over a period of time. A drawdown is the temporary drop in your account's value from its highest point. Equity is the total value of your trading account, which includes the profits and losses from any trades you currently have open. Support is a price level where the price tends to stop falling and often bounces back up. Resistance is a price level where the price tends to stop rising and often turns back down. A breakout happens when the price moves strongly past a support or resistance level. A trend is the overall direction that the market is moving, which can be up, down, or sideways. A retracement is a brief and temporary move against the main trend before it continues in the original direction. A reversal is a complete and lasting change in the direction of a market's trend. A candlestick is a type of chart that shows you the opening, highest, lowest, and closing prices of an asset for a specific time period. A doji is a type of candlestick that shows indecision in the market because its open and close prices are almost the same. A hammer is a bullish candlestick pattern that can signal a potential reversal from a downtrend. An engulfing pattern happens when a candle is so large it completely covers the body of the previous one. A moving average, or MA, is a line on a chart that shows the average price of an asset over a certain period. MACD is a popular indicator that uses moving averages to help you spot trends and momentum. RSI, or the Relative Strength Index, is a momentum indicator that tells you if an asset is overbought or oversold. A stochastic is another momentum indicator that helps you anticipate when a trend might be about to reverse. Bollinger Bands are lines on a chart that show you how volatile a market is by wrapping around a moving average. Volume is the total number of assets or contracts that have been traded over a specific period. Fibonacci is a tool that traders use to find potential support and resistance levels. Confluence is when you see multiple indicators or signals all pointing to the same conclusion at a single price level. Divergence occurs when an asset's price is moving in one direction, but a momentum indicator is moving in the opposite direction. Risk management is the set of rules and strategies you use to control your losses and protect your trading capital. Reward to risk ratio, or RRR, is a comparison of how much money you stand to gain versus how much you stand to lose on a single trade. Position sizing is the process of deciding how many lots or units to trade based on your risk tolerance. Overtrading is the mistake of trading too often, or with a position size that's too big, usually due to emotion. FOMO, or the fear of missing out, is the emotional urge to enter a trade because you're worried you'll miss out on a big move. Discipline is the ability to stick to your trading plan and strategy without letting your emotions control your decisions. Confirmation bias is the psychological tendency to only look for information that confirms what you already believe about a trade. Revenge trading is the harmful habit of immediately entering a new trade after a loss, hoping to make back the money you lost. Backtesting is the process of testing a trading strategy on past market data to see how it would have performed. Forward testing is when you try out a trading strategy in real time, either on a demo account or with a small amount of live money. GDP, or gross domestic product, is a measure of a country's economic health. An interest rate is the cost of borrowing money and is typically set by a country's central bank. Inflation is the rise in prices for goods and services over time, which reduces your purchasing power. The CPI, or Consumer Price Index, is the most common way we measure inflation. NFP, or non-farm payrolls, is a very important monthly report on job data in the United States. The FOMC, or Federal Open Market Committee, is the group that sets US interest rates. Monetary policy is the strategy a central bank uses to manage a country's money supply and interest rates. A hawkish policy stance is aggressive and usually involves raising interest rates to fight inflation. A dovish policy stance is more accommodative and favours lowering interest rates to stimulate the economy. The economic calendar is a schedule of all the major financial news releases that can affect the markets. Equity represents your shares of ownership in a company or asset. In trading, the equity is the real-time value of your trading account. The balance plus floating P&L equals equity. An ETF, or exchange-traded fund, is a basket of different assets that you can trade just like a regular stock. An index is a group of assets that are used to represent the overall performance of a market, like the S&P 500. An IPO, or initial public offering, is when a company first sells its stock to the public. A dividend is a portion of a company's profit that is paid out to its shareholders. An earnings report is a company's official summary of its financial performance for a specific quarter. Options are financial contracts that give you the right, but not the obligation, to buy or sell an asset at a specific price. A call option gives you the right to buy an asset at a predetermined price. A put option gives you the right to sell an asset at a predetermined price. The strike price is the fixed price at which you can choose to buy or sell an asset with an options contract. The expiration date is the specific date when an options contract becomes invalid. Derivatives are financial products whose value comes from an underlying asset, like a stock or a currency. Crypto, short for cryptocurrency, refers to digital assets that use a technology called blockchain to operate. A blockchain is a decentralized digital ledger that records and verifies all transactions. DeFi, or decentralized finance, refers to a range of financial services that operate on a blockchain without a central authority. An altcoin is any cryptocurrency other than Bitcoin. A token is a digital asset that is issued on an existing blockchain, like Ethereum. A stablecoin is a type of cryptocurrency that is pegged to the value of a more stable asset, like the US dollar. A smart contract is a self-executing computer code that runs on a blockchain and automatically carries out an agreement. A gas fee is the fee you pay to execute a transaction or a smart contract on a blockchain. A broker is a company that provides you with a platform and access to financial markets so you can trade. MT4 and MT5 are two of the most popular trading platforms for Forex and contract for difference trading. Tradingview is a widely used charting platform that lets you analyse and track many different financial markets. An EA, or expert advisor, is a piece of software that can automatically execute trades for you based on a set of rules. Copy trading is a feature that allows you to automatically copy the trades of another, more experienced trader, or copy from another account you primarily trade with. Slippage is the difference between the expected price of a trade and the actual price at which it was executed. A market order is an order to buy or sell an asset immediately at the current market price. A limit order is a request to buy or sell an asset at a specific price or a better one. A stop order is a type of order that becomes a market or limit order once the price reaches a certain level. A pending order is any order you've placed that is set to be triggered in the future when a certain condition is met. Sentiment is the overall feeling or attitude of traders toward a particular market or asset. A risk-on environment is when investors are feeling confident and are willing to take on more risk, often pushing up asset prices. A risk-off environment is when investors are cautious and move their money, often from stocks, into safer assets like bonds or gold. A safe haven is an asset that is expected to hold or increase its value during a period of market uncertainty. The volatility index, or VIX, is a measure of the expected volatility of the S&P 500. Headline risk is the risk that a sudden and unexpected news event will cause a quick, significant price change. Geopolitical risk refers to the market risk that comes from political conflicts or instability between different countries. A flash crash is a sudden, extreme drop in prices that happens in a very short amount of time. A circuit breaker is a market-wide system that automatically halts trading to prevent extreme volatility. A black swan is a rare and unpredictable event that has a very severe and widespread impact on the markets. Compounding is the process of reinvesting your profits back into your account to make your capital grow exponentially. Thanks so much for watching, and I'll see you in the next video.